Greetings traders, I have a non-cherry bomb trade for you today, and we're going to go pretty fast. Cisco, you might think it's Costco, it's not. It has a liquidity rank of 4 out of 4 and an IV rank of 12. But what I find particularly interesting on this September 12th, 2021 is that its IV percentile is near 100%. It's in the 90s. And yeah, and that has me intrigued. Which one is right? Like, is it high IV or is it low IV relatively? And we're going to position ourselves using the IV rank as an indicator of low volatility and potentially positioning ourselves to benefit should the price drop and volatility goes up. So that's why we're looking at a long put vertical. So let's hop on in, shall we? Hi everybody, my name is Neil. This is Option Theory. You can see we are in Thinkorswim. I want to thank you so much for joining us, and I do appreciate when you watch these videos to the end. So if you're watching, stick around for just a little bit longer. We will get this trade on, and maybe you also will put this trade on. We're doing it inside of simulated trading, so we get all the risk, not all the risk, none of the risk with all of the learning. All right, I'll get that order right. Now, let's go to the Analyze tab here, add a simulated trade, and I've already built out this trade, so we can go kind of quickly. We're looking at buying the 60 put for $1.83, selling the 57.50 put for 71 cents. So that takes off most of that extra dollar there, right? That 70 something cents. We're looking at paying a debit of about $1, so $1.05. That is our maximum risk in this trade. It is defined risk, so you can sleep at night. Are you really willing to risk that dollar to be able to make $1.45-ish, right? We'll tell you about the probabilities as we take a look at that now. Let's go to the risk profile. Set the date in the top right corner to the same date you see in blue in the bottom left corner. That'll allow you to see the expected move. You can stretch that out or shrink it if you'd like. I usually like to expand it so that we see most of that there. And then I like to take, and I go to this button right here, which if I click it, you won't see, sorry. But you're going to then go to Set Slices, Break Even, and choose the same blue date that you see there. That's going to set this gold price slice right to where it crosses dashed horizontal break even line. That shows us that expiration, we're looking at a 49. I'm going to round up to 0.02%, about 49% probability of profit at expiration. But we also are understanding that to follow a tasty trade mechanic, you're looking at closing this trade, managing it at about, well, it's defined risk. So, 21 days and 50% of the max profit is the standard tasty trade approach. But with these guys, if they're going against me, I don't really manage them at 21 days because defined risk. All right, so let's go ahead and right click this trade. This is where you're going to choose confirm and send. You didn't see that, but I promise that's exactly what I just did. I'm going to click this button so you can see the confirm and send window that pops up. Looking at $1.45 of profit, or $145 of max profit. And I want to switch quickly over to this screen here where you can see the probabilities. Go back to the trade. We're looking at a 69% probability of taking off, let's call it $72 in the next 38 days. And that sounds good. Lots of little wins, right? So let's head on back to Thinkorswim. Let's go ahead and hit send and put that in the margin account. What that's going to do for us as we go back to the full screen here is put that in our working orders, and you can see there it is, and we'll see what happens. All right, you made it this far into the video. Here's your thumbs up. If you feel I've earned one, there's a thumbs up button for you to hit there. If you haven't subscribed yet, we'll be here for you. And yeah, one thing you could do is to subscribe to Tasty Trade's Cherry Bomb email list down below in the description. Go on over. It's not something that I get anything from them for. It's no affiliate relationships, just good quality emails sent to you on a normal trading week when we don't have a trading holiday like we did yesterday. You'll get 5 emails, one of which is the Motivational Monday one, right, which we got today, so no cherry bomb. That's why it's not a cherry bomb trade today. It's just one from my old noodle here. All right, so there you are. Until I see you next time, may the market be with you.